Hi everybody, this is Dan Hussey bringing you an April 15th, 2011 update, week-ending update as well for the euro dollar. I do want to point out I have it going higher. Last week we took a look at why the trend for that week and how it played out. And we'll take a look at that in a second, but I first want to start with the Elliott wave analysis of the euro dollar. First and foremost, down here from March 20th through March 30th, we had consolidation in the euro in a triangle fashion. That triangle broke out higher, and in my opinion, broke out, and we're now consolidating in a very similar triangle fashion. That triangle began April 13th. And could possibly last through maybe the 17th, 18th. It's certainly going to last into next week. I do want to also mention that maybe this wave 4 has completed, and we are in the wave 5 of 3 up. But keep in mind that after this wave 3, we'll get another consolidation pattern before we do press higher. So long as we stay above the 143.60 level, this pattern remains valid, and that's also so long as we stay below the 145 level. So if we chop around in this wedge pattern, which could expand slightly more like this one did, we will be seeing some flagging on the highs for a number of days, which would be a continuation pattern. Let's take a look at the long-term update real quick. So from a daily standpoint, we've been in a series of measured moves that began back in January of 2010, or January 2011 rather. The entire move up to 148.50, well, that's where we're targeting, began back in June of 2010. After the move from the 118 lows or 119 lows to the 142.80 highs in November of 2010, we had a significant pullback to the 50% retracement level. We retraced a 2,400 pip move to almost the 61.8. We failed to break below the 128 or 127.90 figure, which would have invalidated the long entries at about the 130.70 figure. That had targets of 148.50. Nevertheless, we held, and we've been in this move higher ever since. Markets moved in measurable increments that continue from entry to target until the trend is invalidated. And this is the trend on the daily time frame. Now we'll take a look at that trend on a smaller time frame, actually on the hourly charts, and to get a better idea of what I mean by how it could be invalidated and how the trend is played out. So beginning in my last video that I submitted for last week, we took a look at price action in the euro from this wedge up to this line here. Basically, the euro had a consolidative pattern that failed to break below its 50% retracement at the 140.50s. That gave you first entry with targets up above. On a smaller time frame, the euro ended up holding its first 50% pullback. The first true pullback was a dirty pullback. Doesn't mean it invalidated the trend, but it would be considered a wave 2, an Elliott wave, a deep retracement that does not hold above 50% more or less. So my point being is that trend began. And every morning at the NYSE Open for last week, if you bought not last week, I guess 2 weeks ago, this is the week of the first week of April I'm talking about here. If you'd bought the euro dollar at the NYSE Open, you would have had a winning trade at the close. So what we really want to look at now is what went on this week here, this consolidation pattern. If you look back to the week before this trending week, we had pretty much a week of consolidation, right? We had more or less a week of consolidation here before we had a trend. So we had trend off, trend on, trend off, and we're expecting some move back in this trend or trend reversal now after this consolidation. Patterns like this play out all the time in the market, and you just have to be a savvy enough trader to realize they exist and disciplined enough to not ignore them. So we take a look at how we got to basically right here last week in last week's video, which was a series of measured moves that I'll just quickly go through here. That moved from entries to targets, And now we have, again, a next entry. So from previous entry to new high, we are holding a 50% retracement of a 143.80 figure. And right now, we have a bearish above or bullish above, bearish below line in the sand at about the 143.40 figure. So, or 143.50 figure rather. So, as long as price action remains above 143.50 and is certainly unable to close below it on an hourly time frame, I remain bullish on the euro dollar with targets currently of 145.80 and 146.90. But it's important to remember that we have longer term time frame targets of 148, 148.50 to be precise. And now I'd like to take a look at silver and show you how in silver markets, or in the metal markets, highly technical markets, how a very similar pattern plays out. So we have here price action. Basically, we're concerned with the price action from the early March lows, which was a consolidative pattern downwards, to that we burst out of through March and into April now. The silver, rather, filled a long entry at the $1.40 level and failed to break below. Get up some crosshairs here. Failed to break below its 39.60 invalidations. The most important thing that I want to point out with silver, however, is its channel that it's currently holding. Silver is holding in an upward channel that is now testing its resistance. So the fact that we have an extension target at the 42.85 that I've been calling out for Twitter for some time now, well, really since April 11th, so for this week I've been calling out the target for 42.85. We hit that target, and we seem to be finding some resistance in this 42.85, 42.90 area. I expect some kind of pullback now, possibly to test lower bounds of this channel, and possibly what would be considered the next. I'm going to hide the fill on this channel so we can see this better, but possibly the next extension long entry. An extension long entry works quite possibly if we do find resistance right here. Same anchor, new high. So we keep the same anchor measurement, move it up to a new high, and it brings up our new entry, which should correlate with this channel support right around the 40.50 figure, with targets at 44 and 45.80, and stops below 40. The other question, though, is, are we holding a larger extension, which could be from this previous high to new high, and we would get a pullback to around 40. Again, also likely testing channel support. Validation for this trade would be 39s with targets at 44.35 and 46.70. So point being is I'm planning on building a silver position on a pullback towards 40 with a 39 stop, looking for a $5 higher target, $4 to $5 higher target. So you have a nice 5-to-1 risk to reward ratio, and a few good technical indicators as well as trend continuation that favor this trade to the upside. Again, invalidation below 39 invalidates this measured move trend on a 4-hour chart, and well, maybe an hourly chart, you could argue, and you would be looking for a much larger pullback, possibly in the nature of an extension from this previous high back in the December high to new highs all the way back to 37. So that's all I have for you today. Remember, favoring euro dollar to the upside, maybe some more continued consolidation here in a wave 4 triangle, but it very well could be that we have completed a wave 4 pullback, and we are now already heading higher in our move, targeting on a daily time frame that move targeting the 148.50s. All right, everybody, I hope you enjoyed my video, and I will be back with you as price action develops.